Welcome to verifiedinvesting.com. My name is Benjamin Poole, head trader here at Verified Investing. In today's video, we're going to talk about the currencies, DXY, British pound, the euro versus the dollar, as well as the Japanese yen versus the US dollar as well. So what I'm going to do is I'm going to dive into the videos and show you where support and or resistance levels are. If you guys have seen the charts, the DXY is actually heading a little bit lower, which is actually putting a lot of buying pressure on the British pound as well as the European euro. And that's going to continue to happen as long as we can stay underneath some resistance on the DXY. Let's go ahead and jump into this first chart. So what I've noticed is price consolidation. So here's this resistance level. You had this low pivot on the DXY. Price tried to get above it and actually did a pretty good job and then got into a little bit of resistance. Now that we're back below this resistance level right here, this is, as you can see, where price consolidated and got rejected every time. On a technical basis, the more often a resistance level is hit, the more it favors a move to the upside. However, that's not the case in the DXY. The DXY continued a little bit lower. So what I'm looking at is if price can consolidate a little bit lower and get to this upsloping trend line that I have in the charts, right about 96.90. This is where the European euro and the British pound will get a little bit pullbacks or more of a pullback. All right, so where's this trend line going? We're going to zoom out in the charts, show you where I've gotten this pivot low. This goes back to the lows of May 2014. Secondary hit right here. It does kind of kiss this level, but I still like this upsloping trend line for confirmation of where the support level is. So right here, it got to the lows of May 2021. And then look at the move to the upside. So if we can get back down into this upsloping trend line, and as well as all of this support in this area, this is where the DXY is going to get a bounce. Now, on the downside, if we break the support level on the DXY, the US dollar index, then you could see a move all the way back down to 95,578 or even down to 93,357. So this is your next area of support on the DXY if this major upsloping trend line does get broken with a confirmation. Let's go ahead and go into the British pound. So the GBP USD British pound. Connect this pivot low here, secondary pivot. Look at how every time this trend line is hit, you're getting a nice bounce. We did start to close below it, but then all of a sudden the DXY had this nice move to the upside, or excuse me, the downside, and that is what's causing the GBP USD to continue to rise. Here's this downsloping trend line that I've monitored on the charts. Pivot top, all this price consolidation looked like we were trying to break down, and then all of a sudden we got this nice rise to the upside. So this tells me that you are into a ton of support if you can get back into this upsloping trend line. On the upside, what we have to do is look at where not only the DXY will catch support, but where the British pound would actually get resistance. So if we can get up to about 137, or excuse me, $1.37.421, that's going to be your resistance area. And for me, that would be a starting position. If you're in futures, I would start going short on the British pound at that level, knowing I've got additional resistance at about $1.38.679 on this chart as well. You're going to have to monitor what's going on with the DXY. If it's into that support trend line, then that's where the pullback in the GBP USD is going to happen. Now, let's go ahead and jump into the euro. Similar price action to with what's going on with the price action of the British pound. Pivot low here, secondary pivot, third pivot. The more often a price action does hit a trend line, the weaker it gets on support. What happened though is we had that resistance level on the DXY, and so this allowed the buyers to step in on the euro and bid it above this downsloping trend line. So what I would be looking for is this downsloping trend line. Now that we've broken above it, I would actually anticipate a little bit of a rollback to retrace the scene of crime, about $1.14652 on the price of EUR USD. And that is where I'd start entering in for a swing trade, knowing that if it does close below this downsloping trend line, then it's likely to head lower. And then the DXY would start ripping. However, this is a lot of support. The reason I like downsloping trend line retraces is it gives me a clear entry point and a clear exit point. And so for me, this would be my entry point for a long play, knowing that if that upsloping trend line does get broken, then we're going to rip to the downside. So it gives me a clear entry point. Now, on the upside, your first level of resistance is going to be this pretty substantial pivot in the charts on EUR USD at $1.19. This is where I would start inching in for short trades if the DXY can get into some support, and then all the way up to about $1.28, 20.08. That is where your additional resistance is. Now, if you zoom out in the charts, that is pretty consistent with all this previous price consolidation as well. So it doesn't mean that it's going to stop at $1.20, but you have additional resistance above it if it does decide to head higher and the DXY just continues to sell off. So this is, again, my resistance levels. And that's not a huge move to the upside. It's about a 1.5%. Anytime you're dealing with euro or any currencies can be extra whippy, come with additional volatility. So this is why I would not mind dollar cost averaging in. If I do have to dollar cost average about $1.28, 20.08, then I would take it off at half off at break even, knowing I've got additional resistance that I could add to the position if I decided to trade this. JPY, this one is actually staying weaker. Look at this downsloping trend line. The other currencies had some downsloping trend lines that broke above. The JPY, on the other hand, look at this pivot top, secondary hit, third hit, kiss at that level, and then all of a sudden you got the fourth or fifth hit. Similar with what happened with the dollar, you had this resistance trend line that probabilities do dictate that there's supposed to be a break above. However, that's not what happened. This is continuing to maintain the resistance, and we've broken this low pivot, and so it does favor a continued move to the downside. So what I'd be looking for is 6177. You have this low pivot in the charts, and this is where I'd look for the price action of the JPY to really bottom out in the charts. Then what I'll be looking for is price to consolidate right here, get to this downsloping trend line, break above, retrace the scene of the crime, and then this is something that you could look for another move to the upside. And again, that's the JPY. So that's what I have for you guys. Thank you so much for joining me. If you guys are getting something out of this, please make sure you're liking, you're following, subscribing, and sharing with those friends. And I always look at my comments in my videos. So if you guys have any comments, I know there will be on what's going on with any of these currencies. Some of you guys are going to say that, you know, I'm crazy. The DXY is never going to go down. Other people are going to scream from the rooftops, yes, there's going to be this huge move down on the DXY, and that upsloping resistance level is just a temporary stopping point before a further flush to the downside. And I would like to hear all of that. I want to see what your guys' perspective is going forward. So that's what I have for you guys. We'll see you guys next time in the charts, and you guys have a great rest of your day. Take care.